Thanks for watching the MoneyShow.com video network. My guest today is Anne-Marie Band. Hi, Anne-Marie.
Hey there, how are you?
Good, and I want to know if you have any suggestions on efficient entry and exit spots for traders.
That's a very good question, and it's a little bit convoluted to answer, but I'll start with the simplest thing. The best thing that a trader can learn to do is look at the same chart in different time frames. And when you look at a time frame that's longer, say a daily, you'll get a general outlook of whether the stock is trending up, down, or sideways. If you see a moving average and it's just below, right, you know that everybody's feeling pretty happy because they're buying on the top of the moving average. But if you say, hey, listen, I want to get into that, the hardest thing a day trader or a short-term swing trader can do is wait. They can't sit on their hands for anything at all. They're, oh, I got to get in now, it's going to run away from me. If you have patience, what you'll notice is a stock will cycle, just like the tides going in and out. The waves, if the tide is coming in, the waves that pull back are not as strong as the waves that come in, and vice versa. And so when you're looking at a stock and it's trending, you want to wait until that big burst has the tiny little pullback. And that pullback will come into your moving averages a lot. But what will really help you in efficiency is by moving to a shorter time frame, say a 30-minute time frame or a 2-hour time frame or something else, because the chart becomes more granular and you can see, oh, it is coming in there, so I can wait. Efficient entries, you really don't have to hardly worry about your exits, just so long as your entries are efficient and you make them as close to support as they can possibly be. Many of us chase stocks because we think momentum's going all the way, but even though it has support down there somewhere, it's well beyond the pain we're willing to risk falling back into that average. So being efficient means being patient, understanding the trend that the stock is moving in and waiting for it to pull back into those areas of support or resistance if you're shorting.
How do I find the time frame that is best for me?
Also an excellent question. If you're a person that deliberates a lot,
yes,
you don't want to run the 1 minute.
I'll be changing my mind every second.
No time for that.
No.
Right? So choosing the best time frame has a lot to do with your personality type. If you find yourself to be extremely impatient, you'll want to look at a smaller time frame because it'll come into your support or into your resistance much more quickly, as opposed to looking at a 30-minute or a 2-hour time frame. If you're impatient, you're like, I'm getting in now, I know it's going to come back a little bit, but I'm just going to wait. And then you're going to end up really putting yourself behind the 8 ball like that. So you have to take a look at yourself. Who are you? And a lot of us that are newer traders or inexperienced traders, we don't quite know what kinds of things make us tick. We don't know what Pavlovian things we've got going on with us that make us click the mouse. And so we have to understand ourselves. And so take a minute and think, okay, am I patient? Do I over-deliberate or do I deliberate a lot? The more you deliberate, the longer your time frame needs to be.
Anne-Marie, thanks for your insights.
It's been a pleasure.
My guest has been Anne-Marie Band. You're watching the MoneyShow.com video network.